And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show from a cloudy Los Angeles. I did want to say welcome. Pretty interesting week last week. We're hovering around some very key levels with the major broader market indices. We will get into that, as well as sector rotation that's continuing to take place. First, let's go ahead and take a look at some of that news that drove the markets last week. And we did get core CPI, very important inflation data last week, came in a lot hotter than anticipated. And in turn, we did see an uptick in interest rates. Not good news for the broader markets. As the week moved on, the latest Federal Reserve meeting notes were released on Wednesday. And it was at that time that, again, Fed Chair Powell and the other governors did reiterate the need to see the inflation moving closer to that 2% target before initiating a rate cut. Now, we did get other inflation data later in the week, the producer price index, and not quite as hot with that number. It was steady. However, at the end of the day, the word is that the Federal Reserve is very, very comfortable with waiting before cutting interest rates. We did see the consideration as far as that June rate cut. Traders, only 15% are anticipating that we will see a rate cut in that June meeting. And there's actual talk now that we may not see a rate cut this year. So big shift there. We'll talk about how that impacted the broader markets. And we are also getting continued geopolitical strife that's also moving the markets in a negative fashion. Next week, we will get March retail sales data and several home construction and housing relating data points. And also, Fed Chair Powell is due to speak at an event on Tuesday, and 10 additional Federal Reserve governors and officials will be out speaking as well. So anticipated volatility as earnings season picks up. Let's go ahead and take a look at those markets and see where we close for the week. And here we are. This is a daily price chart of the S&P 500. And we did, in fact, close below that key 21-day simple moving average and are now very close to this 50-day simple moving average. We're about 0.2% above that. This 50-day simple moving average is a very critical point for the markets. It's a moving average that's very widely used, certainly relative to the broader market indices. So if we do see a break below that, we could see further weakness simply because of the implication that a break below this key support is not constructive. The RSI did close below 50 in negative territory. That MACD moving average convergence divergence, another momentum indicator, trending downward, but remaining still above this key net neutral area. So it does remain in positive territory, but at the end of the day, there is definite weakness that is continuing to present itself. So from here, let's go ahead and take a look beneath those broader market indices. I'm going to update this. We are looking at a daily price chart of the 11 underlying sectors in the S&P 500. And from here, I've added a relative strength indicator and sorted these sectors by strength down to weakness. So this is an evolution that does take shape regularly, but slowly. So we're not seeing a lot of bounciness. It does allow you to really get your arms around where that relative strength is, and then also that weakness. So let's go ahead and take a look here. Energy still up here at the forefront. The group was down almost 2.5%, quite a big drop today. But at the end of the day, this strength going into today's move lower is keeping it up here at the forefront. And there are certainly names in this particular group that are remaining above each of their key moving averages. Now, we will want to keep an eye on this MACD black line down through the red, as oftentimes it's not a sell signal by any means, but it can certainly signal that this uptrend has at least paused. We'll be on the lookout for further signs because we did get pretty high volume on today's pullback in energy. So let's go ahead and move through and take a look at some of these other industry groups up here at the forefront. Utilities were outperformers, not by a lot this week, but a little bit. We can see that this move down below that 21-day simple moving average poised to turn negative. But here again, this signal that that uptrend at the very least is pausing. Now on to more impactful sectors. We do want to be on top of this continued deterioration in healthcare. This is XLV. The group was down 3.3%. And this is something that I've been pointing out over the last 2 weeks as far as the group's weakness and then move into a downtrend. And that was signaled with this close below the key 50-day simple moving average, negative RSI. And take a look. We had a signal back here in the beginning of March that this uptrend, again, at the very least had paused. If we take a look at this first 2-week period in March, you'll see the MACD trending downward. And during that period, the healthcare sector was in a back and fill. So it's, again, not a signal of a downtrend, but eventually we did get that more weak signal as that MACD moved into negative territory. Also, taking a look at some of these other sectors, we did have earnings season begin last week. JP Morgan among several bank names that report it. So we now have XLF joining other sectors in a downtrend below that 50-day with a negative RSI. Another area that I did want to point out to you that held in relatively well, and that was basic materials, although we did see a 2% sell-off today. There are a couple of areas here worth noting. Again, also in a weak position with a negative RSI. So we can see overall that we are experiencing quite a bit by way of weakness and movement into and actually out of some of these growthier areas. Here we are with consumer discretionary XLY, and this particular group was down, I say only 1.2%, but I would argue that mega cap names did help support this area, but it is below that 50-day with negative momentum indicators. Now, let's go ahead and move forward. We want to get more refined as far as really having a sense of relative strength versus weakness, and I use select ETFs to do just that. 2-month daily price chart view, strength to weakness, and here we are. Brent crude oil pricing closing at $89 per barrel. Really, anything up in this $90 barrel is really quite elevated and very beneficial, certainly to select areas within the energy sector. So you can see that we are holding up well. Geopolitical strife in the Mideast is having some analysts calling for $100 per barrel oil. So, of course, we will be keeping a close eye on that relative to some of these select energy areas. Also up here at the forefront, most notable and most impactful, this is the yield on the US 10-year Treasury, and take a look. This is that spike on Wednesday in response to that hotter than anticipated inflationary data and FOMC notes. And so we can see that we closed the week at the 4.45 level. I'll be getting more into this over the weekend with my MEM Edge report, where I will be sharing with you critical levels with these yields relative to specific areas of the market. We can go back to this August into November period as precedent, but I would urge you to use that link below. You can trial my twice weekly report at a very nominal fee, help you stay on top of these markets. Up here in this stronger area, semiconductors, and they did relatively outperform, a lot of that having to do with heavyweight NVIDIA, which fared well, flat for the week. But we can see weakness continuing to creep in. Next week, we have 2 key semiconductor companies due to report their earnings, and certainly their outlook for growth going forward will definitely impact other names in that particular group. Housing stocks pulled back quite a bit. XHB down 4.4%. A lot to do with that rise in interest rates. You can see that the group did hold here at this 50-day. We do have those housing data numbers coming out next week, which could easily impact the group. But overall, we are seeing considerable weakness there. Talked about healthcare in a continuation of its downtrend. This is IHI Medical Products ETF, and it is a growthier area of healthcare, and it was down 2.5% last week, with the momentum shifting into negative territory here with both that MACD and that RSI. One other area in healthcare that we can take a quick look at here, IBB. This is the NASDAQ's Biotech ETF. Considerable weakness here, downtrending. RSI in negative territory, as is the MACD. And generally, when you see this area of the markets seeing this selling and on pretty heavy volume, it is indicative of a risk-off mentality among investors. Now, there is one other area I will get into outside of here, but I did also want to point out to you this banking. I had been on the lookout here for a move into banks going into earnings. In fact, I added 2 stocks to my MEM Edge suggested holdings list. However, I did remove them as we are seeing continued weakness, and certainly JP Morgan's outlook for growth for their bank did in fact move the overall group lower. Let's take a look here at another area that's very sensitive to certainly investor sentiment. This is IWM, the Russell 2000 small cap down 3.2%. Unfortunately, now back below that 50-day with negative momentum. So net, you can see considerable weakness throughout the broader markets. And from here, you can simply type in the area or the particular stock that you're on the lookout for. Here we are. This is the Volatility Index, also known as the Fear Index, and very important metric because as we continue to creep up, generally speaking, from my work, anything above 16 is going to be a yellow flag. And then as we spike higher, we did get up as high as 19 on this volatility index. Anything above 18 is going to turn that yellow flag into a red flag. Now, we did close at 17, but we are seeing spikes in volatility, which can be another negative signal for the broader markets. From here, I wanted to share with you sell signals, given the weakness that we are seeing throughout the broader markets, and a tutorial of sorts as far as putting a system in place to know when it's time to exit. Now, my work does tend to focus on longer-term stock buy ideas, dependent, of course, on the broader markets, but I do have an eye on capitalizing on outperformance among larger cap names that do in fact go on to outperform for longer than a week or two. So that is the focus when sharing what I'm going to speak to right now. Here we are with Intel, INTC, well-known company. The company already had been exhibiting relative weakness before we had this gap down. And this gap down was all about management revealing their financials for their foundry business, and it was not good news. But today we are going to focus more on this chart because what we can take a look at here is both a short-term or a very near-term sell signal, and then a sell signal for longer-term investors. So certainly if we go back to this gap down back here at the end of January, not good news because we did close below that 50-day simple moving average. So if you're examining your portfolio and looking at these names and are a shorter term investor, that would be a negative signal as we got this negative momentum shift here. Now, what then occurred beyond that, as Intel was unable to recover and resume an uptrend, we had these shorter term 10 and 21-day simple moving averages begin to trend lower. So instead of acting as support, they begin to act as upside resistance. Again, here, this is that news I talked about on their accounting level, and you can see another gap down. Of note here is the above average volume on the selling, and now we have continued deterioration in the momentum signals. So from here, let's go ahead and take a look at a longer term chart for longer term investors. And same signals are going to apply. We're going to pull up a weekly chart for Intel, and you really could have held on through this back and fill period that we were looking at on the daily chart. But for longer term investors, if we do see that RSI turn negative on the weekly, and this is a core position in your portfolio, you will want to take note. We also had this MACD crossover. This is that pullback and gap down at the beginning of the year. But again, once we break below, this is that 10-week simple moving average. Now we've broken below, this is last week, this key 200-day simple moving average. Definitely time to move on. You can see these high volume characteristics here, and then further weakness. Oftentimes, it's very helpful to use historical precedents as your guide. Here again, with that negative. Now, of course, this is a period where we had that MACD black line down through the red as your initial signal, and then continued weakness, a break below that 200-day simple moving average, preceding a very lengthy decline. And from here, I also did want to share with you names and areas that I am keeping an eye on as far as formulating a watch list so that when strength comes back into, for instance, we talked about healthcare. I'll share with you a stock that is holding in relatively well. This is Novo Nordisk. NVO is the ticker symbol. So a couple of key components that are going to be of certain interest to me, and that is the fact that we are staying above this key 50-day simple moving average. Now, at this point in time, your momentum is negative, that RSI and MACD, both in negative territory, but take a look. If we look at precedents, keeping an eye out for a move in NVO back above these shorter term moving averages, get that RSI into positive territory, and have a nice black line up through the red on that MACD. Of course, you will want to consider the strength in the overall markets, in the healthcare group, and ideally have that downtrend reversal take place on good news. Also, I did want to share with you names that are holding in well. We talked about XLB, basic materials, but there is and has been a move into metals, particularly gold, in periods of geopolitical and uncertainty elsewhere. This is an area that will tend to shine. So here we are with GLD, and obviously we've experienced a significant move in this particular name as it continues to reach to new highs. And what I wanted to share with you is the fact when these names get going, I'm going to go ahead and add an additional simple moving average, which can become your guide. And this is a 5-day simple moving average where pullbacks are going to be used as potential buy points. And then, of course, a move below those shorter term will certainly, in this case, signal a period or a pause. Let's take a look at a couple of other names in this particular group that are also holding in relatively well. This is Pan American Silver. You can see that 5-day again being very instrumental as far as your guide. Uranium is another area that is holding in well. This is Cameco Corp, CCJ. You can see that nice base breakout shaping up here in that particular name. And then last up, GFI is another gold-related name. gold fields, and you can see how that 5-day simple moving average can be quite helpful. Now, when you're looking at names that have already had a significant move, certainly 12 up here to 18 is a nice return, but you can use that weekly chart as your guide to give you a sense of whether there could be further upside. And in fact, using this MACD relative to the heights that can be reached when that name really gets going, we're not quite in an overbought position just yet. So for those of you that are potentially shorter term, you can use that longer term guide to signal that there could certainly be further upside. Last up, I'm going to share with you a name that did experience a base breakout, and this is all about reaching outside of the US market, and it is a South Korean retailer, CPNG, and take a look. It's up quite a bit more than I had thought. I'd done my screening earlier in the day, but what I did want to highlight here is certainly this gap up on super heavy volume. We just today had that MACD bullish crossover, and the company had this gap up due to the fact that they are raising their subscription rates. The company is similar to Amazon as far as their retailing and positioning, that if you pay extra, you do get some extra features. And that's it for this week. Again, if you like what you've seen, go ahead and hit that like button. Any questions you might have, I'd be happy to answer them. And as always, use that link below. You can trial my twice weekly MEM Edge report and stay on top of these markets. Have a great weekend, everyone. See you next Friday.